Hello, everybody. Today I wanted to share with you a strategy that I've been doing for a couple months now. It's just a variation of my in the money covered calls. So really, I look at it completely as an income generating system, not really to hold the shares beyond a couple of weeks. So the system really just involves buying covered calls and selling in the money covered calls. And what it really does is it provides income with some downside protection, which has been really helpful in this down market or even sideways markets. So my goal was to create a conservative strategy that using stocks and ETFs that this strategy should be able to beat the overall S&P over an extended period of time. It also, a big thing is it should reduce stress as stocks sometimes go down and then you have a loss. So this strategy, even if the stock went down to a certain extent, it should be a profitable trade. And the process I wanted to set up, I wanted to make it easy, straightforward, very repeatable, and not involve sitting in front of the computer watching the screen all day. So just looking back, the S&P has averaged about 12% per year over the past 10 years or so. And it's actually was like 11.7. It's right about that level this year. So my goal for this strategy is to earn between 15 and 24% annualized, or between 1.25% and 2% a month. So based on a $100,000 account, this would generate, if we meet those goals, 15 to 24,000 a year. So you could adjust to whatever capital you're trading based on that. And the other thing is, if you don't need the income, you can reinvest this money and put, and it would grow to 116,000 based on a 15% annualized return if you just keep reinvesting those gains. So the basics of the strategy, we're going to look for, call strong stocks or ETF every week, and we're going to sell expirations 2 weeks out. So, generally it's going to be between 10 to 14 days. And my strategy involves using half of the capital every week. So for example, if you had a $50,000 account, we're trading 25,000 this week and 25,000 next week in terms of expiration dates. So the basics. So one of the things that I am looking for in this strategy is I want to make sure that I have at least 5% downside protection. So that means if the stock is $100, it could drop 5% and the trade would still be profitable. And I also want to sell the call that's 2 times the expected move for the option that I'm selling. And when I set these trades up, I'm looking for at least an 18% annualized return. So that will give us some room if we have some losses along the way. And we will. I mean, if the stock really pulls back hard, it will have a loss. The strategy was really designed to provide a weekly income. After the second week, you should be able to generate an income if you need it. If you didn't need the income, you could roll it over. So that is the kind of the basics of the strategy. And we'll also look for dividends. So if we can sell an in-the-money covered call, still meet our requirements, and collect the dividend, it's just going to improve our overall results. So we like dividends. I will say that over the past time, we're able to get a better rate of return and more downside on non-dividend, but I continue to look for dividend trades. So the process, it's pretty straightforward. So I go through a list each weekend and try to identify stocks or ETF that are strong fundamentally and in a bullish trend. So we have a clear, kind of movement up, and they should offer weekly options. and have sufficient open interest, liquidity, and a reasonable bid ask. And so then I run the numbers over the weekend to see how far in the money I can go to generate that 18 plus annualized return. And then over the course of the week, I will add positions selling the calls 2 weeks out. Here's just an example of a trade that I put on. It was an FUTU. We bought the shares. We sold the 11.3. So we got a return of 0.57% in 10 days, which is an annualized 21%. And we were able to go almost 14% out of the money for downside protection on the trade. So that's kind of, and then the chart, I draw in where there's kind of a clear support line there. So the break even though we bought the shares at 61.20, our break even was 52.70. So that's kind of the setup that we look for on each and every trade. Here's another one. This was an ANET. We bought the shares at 196. We sold the 182.50 call. So we're selling the call well below where the stock is currently trading. It was a 0.82% return in 11 days, 8% downside protection, and our break even was all the way down to 181. So that's kind of the setup that we like, is getting a really good rate of return, tons of downside protection, and the stock in an overall bullish trend. And over the weekend, I will develop a watch list. And here's just a copy of one that was recently done. So on this watch list, I will list the date, the stock. We track the live price via Google. And then we'll put in what is the stock price, what strike are we selling, and then we calculate how far that strike is in the money. And then I look at what is the expected move based on the option chain and what is our credit. So then you get, what is the combined credit, and the combined credit would be the credit plus income if, a dividend. And then we look at, what is the price, the cost per 100 shares, rate of return. And then I calculate the downside to break even and the downside to max profit. So there's a difference. So if the stock drops below my short strike, it can still be profitable, but I start to lose profit. So I want to track what's my downside to max profit and what's my downside to break even, what's the annualized rate of return, and what's my break even. So, and then if there's any other comments such as they have earnings coming up or an ex-dividend date, we want to track that as well. So one of the things that I did recently was develop an in-the-money covered call checklist. And so one of the things that I will do is make sure it's rated 5 or above in bar chart. It's over both the 200 and the 50-day moving average. No earnings coming up before expiration. Have a minimum of 5% downside protection. And I want to make sure that I can sell that short strike below a support level. And again, I'm looking for 18% annualized return on the trade, good bid-ask spread, and open interest. I'm also looking at the beta being under 1.5, and I'm generally trying to look for large cap stocks or big ETFs. As far as managing the trade, for the most part, if everything goes well, we will just let the positions expire. However, if it's Thursday or Friday before the expiration and I can exit the entire trade or exit the option for 5 cents or 10 cents of the full profit, I'll go ahead and do that. That'll free up capital to add additional trades. And if the stock closes below my break-even point, I would exit the trade. And then occasionally I will roll expirations if it still meets the requirement of the criteria and generates enough additional new credit. Here's just a snapshot of a 4 trades that expired on 10/20. So you can see that they had what the entry level was, what short strike I sold, what the net debit was, which is really the break even level, the live price, and how far the price is still in the money. So those are all would have just expired for a full profit if we didn't close them a day or two early. Here's another one that just shows, how far they're in the money. And so, all of those worked out well. Just a recap. So this is an income strategy using in the money covered calls. It's ideal for accounts such as an IRA because you're just generating income and putting that income back in your IRA. I'm looking on the trades an 18% annualized return or better. A minimum of 5% of downside protection. I'm selling these calls about 2 weeks out. And I'm also looking for dividends on stocks that meet all of the requirements. So that is the strategy. If you have any questions or feedback, I'd love to hear from you. My email is right there, brian.terrycfp@gmail. I have a Facebook group page called Conservative Covered Calls. So I'll be posting this video there as well. So you can also send me a private message. And I also post my trades in Eric's group, Stock Market optionstrading.net. So I hope this has been helpful. It's a strategy that I'll be posting my trades on Eric's group as well as in Facebook. And I'm looking forward to hearing from you. I appreciate y'all listening.